what I wanted to get into next here is the financials, because this is, I think, where sort of the rubber meets the road, and a lot of these thoughts get a lot, and my feelings about the company get a lot more negative. Welcome to HyperCharts world. You can go to hypercharts.co/we. We put up all the WeWork financials, so you can check it out and play with them yourself. I actually estimated that. We're gonna get to that in a sec. So this is WeWork. As you can see, memberships, skyrocketing pretty strongly, 527,000 as of Q2. But let's go to the revenue and operating income. So you can see huge losses. This is the trend of WeWork. Huge losses, and they're growing. It's not even, I don't know. So the company's losing an absurd amount of money. I mean, they did, $807 million in revenue, but they lost $729 million. So for every dollar in revenue they bring in, they actually lose $1. So not a great business so far. But then on the other hand, you do have rapidly improving profitability on some levels with exploding gross profit. And so, this isn't about the gross profit or the operating income. It's all about top line growth. That's the story for WeWork, 800 million. We're looking at over a $3 billion revenue run rate. But now let's get a little bit deeper into what's happening here. The gross margins of the business are improving, like I said. So this is probably the most encouraging sign here, but still very, very low. I mean, this is a company, like I said, that at 20 billion, if they were to IPO, is at like 10 or, 50, I guess 3 billion run rate now. So like 7 times sales, 6 times sales, but it's a business that is trading at 20, but it's a business that does 20% gross margins, super low gross margins. So that's important to keep in mind. Operating margin, we're not seeing any improvement. So as they grow, as they scale, we're not seeing any underlying margin improvement. I think that's kind of a red flag. So now let's move into the estimates. So now I'm going to go to my estimates tab, and I put in, this is a new feature we did for HyperCharts. You can type in estimates. So I can edit my estimates. It's basically like financial modeling. Really cool. You can go to hypercharts.co if you want to check it out. And I'm actually going to share the link to my financial model so you guys can all check it out. It'll be in the description of this video. Anyway, so I estimated WeWork's financials out until 2021 because I was like, what is it going to take for this company to get profitable? And I came to the conclusion that is an absurd amount of stuff. So as you can see, these are my estimated financials. Continued huge growth, huge improvements in the losses. Still not profitable, but huge improvements in the losses. And of course, exploding gross profit as I gave them some gross margin improvement as well. But what's really happening here? I tried to estimate that if they, continuing their trajectory of expenses and then assuming their expenses stay flat for every single quarter throughout 2021, literally flat expenses, no growth in any of their SG&A or operating expenses at all. And I assumed improving gross margins, significantly improving gross margins all the way up to 28% by the end of 2021. Even with that, they still can't get to profitability in Q4 2021. They'll be doing 2.7 or 2.8 billion in revenue, but they'll still be losing $185 million. And this is assuming that I kept their expenses flat. So this is just kind of a little exercise I wanted to show you of just walking through. I think it's helpful to just play around with this and show you guys that even assuming these huge improvements, even assuming they stop spending, like this business just isn't going to make money for an extremely long time. And I just don't think the economics of the business are that good. So even without my estimates, just to go back to it, to sum up WeWork, we have booming losses, although we do have booming revenue growth as well. And, to sum up my thoughts on WeWork, I think it's really easy to sort of say, oh my gosh, this $47 billion valuation is absurd. WeWork's a joke. Adam Newman's doing all this double dealing. I think that's a lazy analysis. On the other hand, to just give them the benefit of the doubt and say they're extremely rapidly growing, they're disrupting the co-working space, I think is a little too much. I think the truth lies somewhere in between. And what I think the biggest and most valid criticism is of WeWork, and this is what the rubber meets the road, this is brass tacks, this is the only thing that matters, is the asset liability mismatch. This is a really brilliant criticism that I think people are giving to WeWork that I'm not fully convinced they're going to overcome, which is WeWork is signing super long-term leases on huge buildings, super long-term liabilities, yet their members are on super short-term durations of rent. So it's asset liability mismatch. Their liabilities are super long-term, their assets are super short-term. How is the rubber going to meet the road here? If all these startups that are WeWork's customers in a recession go bankrupt and they stop paying rent, WeWork still got to pay their rent, but all their customers just died. And so that's how WeWork becomes financially insolvent really, really quick in a potential recession if all their customers leave. So this is the downward death spiral asset liability mismatch, but I think is a brilliant analysis and critique of WeWork, and personally a reason why I wouldn't really feel comfortable owning this stock, or am not yet, because I just think there's a really good chance they go bankrupt in the next recession because of that. But like I said, that switch to enterprise customers, that switch to much longer term deals, to the We operating system, to building, offices for IBM and for huge companies, I think is going to become a much bigger and bigger business. And I think there is a fundamental change in the way people work that WeWork has hit the nail on the head on, and they are a first mover. And I think in the future, every single firm will outsource the curation and management and structure of its offices to a firm like WeWork. And I think that firm, whether it's WeWork or not, has the potential to be a huge, huge business.